Alright guys, welcome to my first video. Lately in many social media channels, Twitter, Instagram, many people have been talking about British American tobacco. British American Tobacco, as you know, cigarettes company trying to move to the tobacco heated products. You can see here the vapes, all these disposable vapes, those cigarette sticks. This is the newest one, the heater. Also, they have these Velo tobacco pouches, and they also have some different brands. Like they also have the Grizzly, and these are all their vapes. The vape. This is the oral. This is the tobacco heating device. Also, many like really recognizable cigarette brands: Newport, American Spirit, Camels, Romans, especially in the more eastern countries. Um, Dunhill and Cat as well, more east. Lucky Strike and Pomo is more like those Western European brands. Um, and many people like they're talking about the dividend yield, the low PE ratio, the stock itself being beaten down since 2017, lost over half its market cap, and also kind of had a rough patch since then, just like trading flat pretty much after it gone down, doing nothing. And I wanna show you my thesis, what I think about this company. And in general, I don't like to look at the, let's say, irrelevant numbers and crunch every little number and every last decimal. I want the business case, the investment thesis to be very clear, and there has to be quite a substantial safety margin. So in case it's like for me, it has to be like a heads and tail. If I bet on heads, then I win. If it's tail, I don't lose much. You probably heard that quote a few times. Well, anyways, I'm gonna present you the my thesis and why I think there is pretty much not a lot of risk, or at least the risk is bearable. So, BAT's problem is they are selling a lot of this stuff, and they're making a lot of money with this. They're not really making money yet with all this stuff, even though they're trying to bring it across that way. They're not yet making a lot of money because, as you see, they've just begun. 1.1 billion people smoke six, and only 100 million people use any of those magical stuff up here. Um, so 2 years ahead of target, which is a plus if they manage to be profitable with these new categories, the tobacco heated products, the oral whatsoever. Um, and yeah, here you can see it's kind of the very important, like the numbers. All right, they keep going up. Like people have been saying, oh, tobacco's a dying industry. Well, kind of, because the volume, yes, the volume is indeed going down, but they still have a lot of pricing power. Um, when you have a product as addicting as tobacco, which the addicting compound itself is the nicotine, you can increase the price by small increments, and the user usually does not really end up stop consuming because it's quite addictive, in my opinion. Many people can stop many things, but it's actually very hard to get off cigarettes because it's a very usually socially accepted drug, um, which kind of has become a daily ritual of many people. So it's actually very hard to quit. You mustn't forget that when thinking about this company. And we can really see that in the still growing revenues. If you look at this chart from TradingView, the revenues since 2017 have gone up, going up, going up, going up, on average 2-3%, depends on the year. Um, you can You can see here from 22 to 23, it's gone up 3%, on average, even 4%. I like to say 2 to 3 because I don't know if that's going to keep going with 4% in the future. That's quite amazing, I think, that they managed to achieve that much revenue growth on just the pricing while volumes going down so much every year. Anyways, what I'm trying to say is the cigarettes are holding up the fat dividend that they're paying right now. So that's good. While they're getting a shit ton of growth from new categories. And also, good news, the new categories have become profitable 2 years ahead of target, as they've said. And if they can keep this going and actually increase the margin when they get people hooked on these kind of products, then they will eventually the cigarettes will keep going down, keep going down. Maybe they'll lose some pricing power because eventually they'll become way too expensive and kind of the let's say there'll be an appealing price factor to these new categories. And then eventually if they even if they don't grow with 20% anymore, but let's say with 10, but they have the same pricing power eventually as the cigarettes, then that would be a really good thing. And the high dividend, which right now they're paying, is sustainable, will keep being sustainable. 63% dividend payout ratio. They pay about 5 billion in dividends. Yeah, exactly, 5 billion from 8.72 billion free cash flow. So they can afford it, no problem. One of the problems they have, which people really talk about, is the debt, and the debt is quite substantial. Um, they do have a lot of debt, as you can see. Most of them in bonds, and if a company's due on their bonds, it's not very pretty because then all the assets are will eventually end up in the hands of the bondholders, and us equity holders or stock holders will be left with nothing. It's not like a bank loan or any kind of other loan where you can maybe strike an agreement. But I would not be so worried about that because, as we have seen, there is a lot of free cash flow to pay down these debts. Which actually right now they're doing. You can see here, issuance slash retirement of debt to minus. So that means they're paying down the debt, they're paying the dividend, and they have the free cash flow to do that. So they're fine. People are afraid that this will be gone. But as I explained, with the pricing power, with the new categories contribution, I think the cash flows, in my opinion, will at least stay the same. But um, right now, the stock is priced that they will go down. And actually, if you would just be a little bit positive, probably the cash flow will keep growing with 2-3%. Um, I think some of the problems which might be a hurdle to BAT increasing its cash flow with the, let's say, 2-3 historic percentages is regulation. But regulation, I don't think will have such a great effect over the next few years. Maybe after 10 years, after 20 years, when people really start to get hooked on those new products. But until then, especially right now, governments have really other issues, especially looking at increasing debt in America or in general, government debts really going to dimensions we have never seen before. Governments won't be that smart to start banning or like issue an all out ban for cigarettes and um, the new oral products, because then they will lose out on a lot of these tax revenues they're earning with cigarettes. And cigarettes or tobacco in general, tobacco products, they're really good contributing to the government budgets. So also you must think realistically about those regulations, how fast they will come. And most of these states, they never issue an all-out ban. They always like let's say, regulate the most dangerous products, which would be like the menthol cigarettes and the vapes with those fruity tastes, which they find very dangerous for young people. But I don't think they will issue all out bans, which these would, yes, they will be very influential to the cash flows. But let's keep going with the presentation. So there's six areas of focus. What I've said, drive profitability in new categories. If they can do this, they can easily increase the cash flows with 2 or 3% per year. Vuse and Velo have become profitable, so the disposable vapes and also the tobacco pouches have become profitable. Very popular with the young people, and this 2 years out of plan, which is really a great achievement. Mm, volume and value share growth in the combustible in the US, encouraging results from commercial plans and strengthening the route to market. So combustibles, yes, value growth. Well, they still have the pricing power, so they have a lot of brands, the Camels, the Newports. People like to smoke those. They're usually a smoker is personality is heavily associated to the brand. So yes, I don't know about what they're talking about the volume, but the value share growth, yeah, you can say that. Mm, significantly strengthening heated products. Enhanced innovation with patent settlement. Actually, I want to talk about this because I have tried this heater and this one. This is the newest tobacco stick glow heater, and the differences between the old one and this one, they're worlds. Like this one has a little display and it shows you which mode it is in when the smoking is done. I'm sorry, the heating. It's not smoking. When the heating is done, it tells you to take your stick out. It tells you when you have to charge it, when you have to clean it. Like this is really good compared to this. I mean, this was also okay. I like the taste. I like the, let's say, subtle feeling of the vapor. But what I'm trying to say is they are really putting people's heads to think about this, and they have brought out a really good product. Especially the taste is become a lot better, and the smoking experience, the heating experience has become a lot more. There's no smoking; it's vapor. Um, all right, responsible new category development. Exactly. What I'm trying to say is before it's all connected to what I've been trying to say. I don't think the regulation will come that quickly, and they will also make sure it won't come that quickly. Yeah, responsible marketing code. For example, if you look at Juul had really a lot of trouble because those kids, they really got hooked on it very quickly and they marketed it too aggressively and let it get out of hand. And I think I think BAT won't do that. They'll try to be a little bit more calm, try not to market it too heavily to the young people, and kind of let them, let's say, get to it themselves and not let it get out of hand like Jewel, because then the regulators will come onto them and really start banning and hurting, the cash flows. Financial flexibility. Continued strong cash generation. Yes, this is very important to watch in this thesis. Operational excellence, self-help. Yes, like every company wants to do, but we really cannot prove that except look at how much they're spending on SG&A and stuff like that. Asset divestments. This is a big topic because, as I've said about the debt, they have a lot of debt, but they have been paying it down. This debt has been accumulated by buying companies like Reynolds and different cigarette brands. And yeah, right now, as you know, the interest rates have gone up, so it's quite good idea to pay down debts, especially as they're become a little bit over leveraged. But now the they're almost in their target range, and they kind of have a hidden ace up their sleeve. Their ITC limited stake, and it's quite a bit stake. I think it's 20%. or it's 25%, and they've started selling it. You can also kind of see it in the little dip here. So it started selling. Um, and ITC has shot up, so it's actually a very good time point to start selling it now and use those cash flow to pay down the debt and also finally start the share buyback. As we can see here, and I can find it. No, I can't find it right now. Anyways, oh, here it is. Um, Share buybacks. These we have been missing these, but here they have done some, and in 2024 they're gonna do some. 2025 they're gonna do some, and that's gonna probably stop this from growing further down, and maybe we'll be by the 40s again because right now the stock as it is, looking to the book value, looking at all the ventures they have. They also have some cannabis ventures. Charles Webb. It's a I think high CBD cannabis strain which heals um, different type of diseases. I think a little girl in America in Colorado had some issues and she used Charles Webb through her parents with the help of her parents, and she actually had some very positive experiences. I think it also helps with seizures, but anyways, it probably won't be substantial to cash flow. What I'm saying is they do have some assets which could be positive. Also, I think the cigarettes won't perform as shitty as the market thinks, especially with the pricing power and the new category that's growing fast. Also, now it's growing profitably even. So the share buybacks will be very effective if things keep going as stated in my thesis. And it's very good actually if they sell this because then they can use the cash flow. And most of us should take an example of it: buy low and sell it high. And then you buy an underpriced asset and you pay off your debt, pay less interest, so you have more cash flow to reward the shareholders for more buybacks and dividends. Anyways, yeah, leverage reduced to 2.6. They reduced even further since this presentation, and now they're almost at their 2%, 2 times target. This is kind of again their ambitions. Yeah, committed to 50% smokeless revenue. I don't know if they can really achieve that by 2045. Maybe if they keep growing like this, yes, but I wouldn't necessarily 100% bet on it. But my thesis is also the that cigarettes still make a big part of this revenue. I don't know, maybe probably a bit more than 50%. But let's see. Maybe they can manage that they can do 50 combustible, 50 new or heated. Um, so yeah, that's kind of the things. What I think, how my thesis is looking. If we run a cash flow, a DCF over it, so very simple DCF, no tricks. One base case, one bear case. Price to free cash flow 7.4 right now, really cheap. There's other companies trading for 30, 40, like Visa, Mastercard, but anyways, those are different subjects. They have pretty much a duopoly between them. So there's different premiums, there's different multiples, but still 7.4 brutally low. My normalized price to free cash flow without capex, growth capex, 7.1. These I haven't changed yet. 5-year average revenue growth, 4%. Free cash flow growth, 3%. ROIC, I have to look that up, but BAT and in general tobacco companies, they have very high ROICs, also ROEs, because it's kind of easy to grow tobacco, wrap it up, and sell it to people. So that has high capital returns. But we don't need this for the TCF anyways. So in my best case, let's say bull case, with some safety margin calculated in, I have a 3% free cash flow growth the next 5 years, and the next six to 10 years, 2%. I have priced in that the multiple goes back up to its median, which used to be 10.5, discount rate of 10%. And that will come out discount to intrinsic value of 40%, so 4% return per year. But also, you have to not forget about the dividends. And in the bear case, you have 2% free cash flow growth, 1% for 10 years, 6 to 10 years. The multiple stays the same, and you have also 10% discount rate, so you have 27% discount to IV. Even if we make this zero, you'll have 19%. If, for example, let's say they do the 4% and also the 3%, and we have even more. Of course, we have more. It's clear that we have more. But this is, let's say they can keep assets at the same value and also maybe slightly increase the dividends, then probably your discount to intrinsic value will be way higher. What I'm trying to say with my DCF is the possibility of losing something on this for me is not that high. I think so. I'm invested in this, just so you know. In the worst case, I'll underperform the index. I can buy an S&P 500. I can run with it, and I can just chill. And right now it's all-time highs, but anyways, I can chill, be diversified into 500 different companies, not having to worry about regulation and all this smoker people, like all the smokers stopping smoking and whatever. But with the S&P 500, I don't get 10% dividend yield paid out to me every quarter. I get a dividend, right? So, which those dividends I can use to invest in even more shares, or I can just buy any other assets and I have a little bit of cash flow because I'm quite a young investor. I like to invest also in growth stocks. But for the months, let's say, where I don't have as much cash flow, but I would like to buy a dip, it's actually very good to have a company like BAT. And my case is that I think in the worst case, with the dividends, I'll at least get my money back. Yes, I would have underperformed, but you never know how the index will perform. Maybe it will be the same performance coming off these all-time highs of the index. Well, anyways, that's kind of my thesis for BAT. There's no advice, as always, just information, just educational uh, comedy, satire content. I hope you guys enjoyed it. You could win some value. You could maybe have some new insights you haven't thought about. That's how I think about BAT. And I hope that the thesis will play out as it does. And I hope you guys also do some more research. Maybe you have some stuff in the comments I've missed out. But, anyways, have a nice day and goodbye.